these weekly update videos. Usually I like publishing it or doing my analysis a little bit closer to daily close so we get a more accurate picture of the weekly close. However, today is my birthday, so I will be probably doing something later around that time. So let's get right on into it. We'll start with the weekly time frame. I'm going to be using the TradingView index chart just because my Bybit chart, it has a lot of annotations and it's very drawn up, so it's a little bit messy, but you see the values are relatively the same, with a $20 difference. But on the weekly time scale, what matters is the general position and the formation of these candlesticks. So, we are technically in a, swing long, a long-term, signal on our long-term swing channel, which is a bullish, it's a buy. However, I was hoping it would play out a little bit sooner, as there is a new bearish narrative or a new bearish scenario that's kind of showed its head now, which is a little bit concerning, but I'll go over that more in depth once we get into the 12-hour and how that applies to our trade. Right now, we're going to look at the higher time frames and kind of how or why this bearish scenario is becoming a little bit more relevant. So on the weekly time frame, we can see, three main things, right? So we see that we have not had really any considerable volume expansion since this, leg up on the 4th of January. Since then, after we had this pullback and, technically had an impulsive or, another leg to the upside, we didn't really see volume expansion with that growth. Therefore, some analysts are considering that this isn't actually a new level, but rather that the price action, from back here to around 30 to 40K is still related and kind of part of the same consolidation period as current price action, just because we technically haven't seen a breakout yet. We haven't seen volume expansion. We haven't seen all the characteristic signs of a major leg up or down, right? Okay, so I'll show this becomes more relevant in the next on the 12-hour, where I actually draw up a pattern. This does form something that looks a little bit like an ascending wedge, and from technical patterns, ascending wedges are usually a bearish sign. I will be releasing an educational video as to why soon. However, generally short and sweet, it is a bearish sign. On top of that, we see kind of a third lower high forming on the RSI, which would complete a 3-drive pattern. And everything, likes to come in threes, usually after a three failed drive, or, 3 points of bearish divergence. In this case, it's regular bearish divergence, which is relatively strong. There usually is some, bigger outcome or bigger play that comes out of that. However, we haven't necessarily confirmed a local top this week. This week is actually closing relatively bullish with this long lower wick, showing that the bulls have been able to buy up a lot of that bearish pressure. So this candle close alone doesn't activate, a bearish bias for me just yet. The next week, the week of the 22nd, so starting tomorrow, is going to be the most telling, because that will either confirm a second bearish candle, which, if it closes more than halfway through this, bullish candle, I would kind of be inclined to call that a local top. And that would probably also show up on the RSI as a local top, meaning that would confirm 3 drives. However, if we get bullish continuation in the next week, we'll probably hit our target in our trade. And at that point, it's game on until, the next resistance RSI level right around 86.5, right? Yeah, sorry, 88. Let's call it 88. Anyway, so keeping an eye on that, we, especially also with volume expansion, we would like to see a little bit of volume expansion next week. If volume kind of continues to be low, we can expect another period of consolidation or sideways action, which at this point would probably play into the bearish narrative. On the MACD, we didn't get as much of a bearish divergence between this high and this high. You can see that technically we had more momentum. However, we are now putting in a lower high on the MACD in comparison to this higher high that we're setting on the weekly time frame. If this ascending wedge does break, I'm inclined to say that more macro retracement would probably be around $20,000 down to 38,000 initially. And if there's really a lot of fear in the market, we could probably drop lower. But on a macro, on a high time frame kind of setting, that 39, probably closer to 40,000, just because that's a more round number, a bigger psychological level, is a pretty critical level to hold as the bulls. Hopping. Oh, let's go on to the Bybit chart now. You can see, zooming out on the weekly on this would have been pretty annoying. Let's have a look at the daily, right? So first things first, right? Let's think about the CME gap, because that's opening most recently. We've seen a lot of, wick action yesterday, Saturday. We got, a big wick to the upside. Probably got a lot of bulls excited. And conversely, today we have a huge wick to the downside. This is why I don't really like trading during the weekends, because you can see that we have extremely low volume. However, we have such big wicks, and that's due to a lack of liquidity due to institutional traders, having the weekends off. So moving forward, today's daily close, once again, looking pretty bullish with this lower, wick, meaning that a little bit of an upside continuation. I think our first target is right around the local high, somewhere around the 61,000 region. I think it's actually 61,150. Therefore, I think it's relatively safe that our first take profit will be hit, after which I will recommend that you move your stop loss to entry, just because we don't know what will happen past that level. We could, come back down and try and test one of these, the bottom side of the range or the mid channel support here. I need to lock these again. However, the greater bearish narrative or scenario that I was talking about. So taking this, previous kind of consolidation area into account before we got this pump up here, connecting all of the swing highs and swing lows, you can see how that becomes a little bit more of an apparent ascending wedge. That is these purple lines. And currently, we are right at the bottom of that, ascending wedge, testing the support line. Therefore, I think it's relatively critical that we get some kind of resolution by March 24th, but timing is so hard to predict. Sometime in the next week, I think, is an important point of resolution, both for the higher time frames, for the weekly, to confirming that local top, along with, kind of giving this ascending wedge a little bit more, weight, or a little bit more consideration, right? And having said that, there's also a fundamental piece of analysis that I think on the 24th or the 23rd, there's going to be a big expiration of option contracts. They're going to be essentially shorts that are expiring. So that should relieve some bearish pressure, which might cause a little bit of a catalyst to the upside, along with that CME gap, which I think is still above us. Not long-term hurdle holds primary here. We can see that, CME closure is right around 58,975. Right now we're at 57,565. So, we still have about $2,000 or a $2,000 CME gap. And as long as that's opening above us at daily closure today, that's going to be a bullish magnet. That's going to be another point for the bulls, because that might get some momentum going to the upside, which might, we might need in order to, most immediately test this local resistance level that we've created, and then hitting our take profit, hopefully. However, once again, looking at, that bearish narrative on the daily, we also do have a bearish divergence here, which is not great. It is technically, a sign of reversal or a little bit of a pullback. However, we did get this huge dump off of that top confirmation. So, this could have technically played out already. And also these, as I said earlier, these counter trend divergences aren't always as reliable, or don't always play out to the magnitude that you expect them to, just because they are counter trend indicators. And especially during strong bull markets, as we've seen, here in Bitcoin all the way down here, those pullbacks can be minimal. I think for the short term, as long as we're closing above this trend line, which has previously marked local resistance, now flipped support of, this kind of consolidation period that we had here and a little bit so here, as long as we're closing above that and, above this ascending ascending wedge support trend line, then things I think are still looking relatively good for our swing long, right? So where I would start getting concerned is if we get no resolution coming into next week or towards the end of next week. If we see no resolution, or any take profits hit, then I will be starting to look at, maybe cutting this trade short, as we're probably likely to go a little bit lower and test slightly more macro levels, which is a different scenario. I have more of an accumulation idea in mind for that. However, we're playing it day by day. It is still Sunday, so technically not the start of the trading week. So I'm not going to be editing any signals or posting any new signals just yet. But short term, I think still things are looking relatively good for the bulls. We've had a lot of messy, tight price action here on Bitcoin, which is technically controlling the market now. We did see, alts popping off a little bit during this time of sideways action in Bitcoin, or especially when Bitcoin was drifting to the upside. We saw a lot of alts pump. So, alts, very lucrative source of profit. However, a break up or a breakdown can really only be magnified on the alts. However, let's have a look at a few of them. I'll start with Ethereum. We haven't really entered a trade on Ethereum because, to be honest, this price action has been pretty messy. It's just been drifting sideways, kind of playing into this broadening megaphone or wedge or whatever you want to call it. So margins are only expanding, and bias is not very clear, as bias on Bitcoin is still not very clear either. So probably not the best position to take a trade. If Ethereum was slightly lower around that 1,600 region, I would be much more confident in taking along. But here you're getting a little bit of a conflicting narrative, because we see, in terms of wicks, in wick language, this looks like a very strong bullish level. You can see it's been defended 1, 2, 3, 4, 5, 6, 7, now 8 times, meaning that this is a pretty big buy zone for the bulls. However, this is the wicks, whereas the candle bodies are telling a slightly different story. Although we did get that, swing high here, they've generally been contracting towards the downside. So although this isn't pretty enough to really draw a descending triangle on, and by no means am I bearish on Ethereum, I don't think it's going to break down. I think Ethereum, like most other altcoins, are probably going to follow Bitcoin's direction and resolution from where it is now, which is, hopefully bullish, but could be bearish. But once we get a confirmed direction from Bitcoin, Ethereum and a lot of other altcoins will become much more tradable. We don't want to expose ourselves to unnecessary risk and uncalculated risk. And since Bitcoin is leading the market, we are trading what is currently leading the market. And, by the same token, yesterday got, initially a very bullish candle, which ended up closing very bearish, which led to downside pressure. And now we're getting almost a equal wick to the downside, so very undecided. However, if you wanted to, start a small accumulation position, this is looking like a very, very solid buy zone. But myself personally, I'm either going to probably wait for confirmation on a break to the upside, confirmed by Bitcoin's break to the upside, or, a slightly lower levels just to get a better position. Maybe I'll do a 5 or 10% buy in at the 382, just for safety's sake. But I am hodling Ethereum, so I'm in no rush to be trading Ethereum in any way. I've kind of screened a few of the altcoins, not so much on most of them. XRP, I posted these accumulation zones back here in the VIP chat. So, congratulations to anyone who got in on XRP. I'm looking at kind of a new support zone, or a new kind of area up here between, 0.4486 and 0.481 to maybe add to my hodl bag. However, I did take a leverage trade from these levels, and I did close, some of it on this trend line test here. However, I'm still holding. It's a low leverage trade, so I can hold it for a while. I'm not going to be adding to my leverage trade here. I might be adding to my spot bag here. But once again, Bitcoin's going to be leading kind of the charge in the direction. However, I do think XRP is an extremely undervalued asset, so I take every opportunity to kind of build my bags whenever I have free capital or, trading revenue. So let's have a look at Link. Link is the only coin, I would say, on Bybit's listings right now that I am, slightly bullish on. And that's just because of this ugly ascending triangle that's kind of forming. Maybe not so much this blue box. It might be a little bit more clear if I get rid of this intermediate support here. Sorry, hide. There we go. But you can see that this top zone has been kind of acting as a resistance, and that being the top side resistance, whereas demand has been increasing by a much bigger like slope or rate than demand, which has been, I mean, supply, which has been, you know, staying relatively constant. Therefore, I think Link is one of the only coins that, you know, might be worth kind of accumulating at these levels. But once again, I'm waiting on Bitcoin resolution and Bitcoin Bitcoin, yeah, exactly, determination, like getting a bias from Bitcoin in order to trade Link, which will probably be, you know, tradable on a breakout retest. However, if you have a higher risk appetite and Link is something that you fundamentally believe in and you'd like to, you know, start getting a little bit of edge, maybe these are good buy-in levels for your first kind of DCA order, so 5 to 10% or something like that. XTZ, a little messy. I mean, it has major bullish potential, but I'm a little bit worried about a legacy trend line that we have. Not so much from back here, but more so from here, you know, which has acted as support, acted as perfect resistance over here. And, you know, since it acted as resistance here, it tells me that other people are watching this as well. So, you know, that kind of creates a little bit of a hard boundary on the risk ratio that we can take. So not the best time to trade right now. I would prefer a more apparent bullish pattern before kind of, you know, buying or going in on it. Litecoin, one of the other coins that, you know, might be slightly bullish, just because it's, you know, drifting price action has kind of been much more pronounced and much more to the upside, where we've already seen a breakout past, you know, that local, you know, consolidation level that we had when Bitcoin dumped, and which is now acting as support. Also on Litecoin, we see a similar ascending wedge forming. So maybe not so much of a long-term hodl, but kind of playing that next bounce or that next wave to the upside. Personally, I don't trade Litecoin that much. I have a little bit of a hodl bag, but I don't like trading this day to day, just because I think there's other altcoins which have, you know, lower values, thus bigger returns. However, you know, this one's looking decent, but also, you know, comes down to Bitcoin. If Bitcoin breaks out of its, you know, ascending wedge to the downside, then most altcoins will probably follow. But that essentially does it for this week's weekly wrap up. Let me know if you have any questions or if you have any concerns or anything like that. I'll do my best to answer them in the VIP chat. I'm going to be a little bit busy tomorrow and Tuesday with some exams and some coursework and stuff like that, so maybe I won't be the most active, you know, for the beginning of next week. But after that, you know, if you ever leave a message in the VIP chat, I'll get back to it as soon as I can. But that does it for this week's weekly technical wrap up. Thank you, and I'll see you guys in the next one.